Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if that fancy 8K filing is actually good news or just a bunch of corporate jargon. So, AB Commercial Real Estate Private Debt Fund, LLC, or the fund as well call them, dropped a report on the 17th of September 2025, and it's got some interesting news about their money situation. If you like your financial deep dives to be clear and easy to understand, you're in the right place. And hey, if you want to join a community that loves digging into these documents, we've got a Discord server linked in the description below, so be sure to check that out. Now, the fund is essentially a company that deals with real estate debt, meaning they lend money out for real estate projects. Think of them as a specialized bank for property developers. What's really important here is an amendment to a big agreement they have, which is basically a master contract for buying and selling debt, or what they call a repurchase and securities contract. This agreement is with some big players like Morgan Stanley. The key takeaway is that this agreement has been changed or amended. And this change is pretty significant. They've increased the amount of money they can borrow and use through this facility. We're talking about going from a $400 million facility to a $500 million facility. That is an extra $100 million in their pocket, or rather available to them. This is a substantial boost and likely means they can do more business, like lend out more money for real estate. It suggests confidence from their partners like Morgan Stanley in the fund's ability to manage and repay these larger sums. So, what does this really mean for the fund and for us trying to understand their business? It means they've secured more firepower. This increased facility size isn't just a number, it's the fuel that allows them to acquire more debt assets and potentially generate more returns. Think of it like a credit card limit increasing. It allows for greater spending, but also requires greater financial responsibility. This move also falls under a section that talks about their financial obligations. Basically, when you increase a borrowing facility, you're increasing the potential debt you might take on. Being the guarantor means they are personally backing this debt. So if for some reason the main borrower couldn't pay, the fund would be on the hook. This emphasizes the importance of managing this facility wisely. Now, why is this important to you? Because when a fund like AB Commercial Real Estate Private Debt Fund, LLC increases its borrowing capacity, it signifies a few things. One, they likely see opportunities in the market to deploy more capital. Two, their lenders, in this case major financial institutions like Morgan Stanley, are willing to extend more credit, which usually means they have a good understanding of the fund's operations and risk management. Three, this can lead to increased profitability for the fund if they can effectively deploy this new capital at a higher rate of return than the cost of borrowing. It's important to note that the filing mentions that there are no specific securities registered on any exchange. This means this isn't a regular publicly traded stock like you might buy on the New York Stock Exchange. It is a private debt fund which operates differently and often serves institutional investors or high net worth individuals rather than the general public. And interestingly, they've checked the box indicating they are an emerging growth company. This means they are a relatively newer company that can take advantage of certain regulatory perks, but it also implies they might be in an earlier stage of development and growth compared to more established firms. Looking at this filing from a broader perspective, it's a positive step for the fund. Increasing their funding capacity by 25%, as highlighted by the move from $400 million to $500 million, signals a strategy of expansion and a belief in their ability to source and manage more real estate debt deals. The key for them now is execution. Can they effectively invest this additional capital to generate the returns that justify the increased borrowing and their role as guarantor? There are always risks with increased leverage. If the real estate market cools or if the underlying loans they invest in perform poorly, a larger debt facility can amplify losses just as it can amplify gains. However, given that they are securing this from reputable institutions like Morgan Stanley, it suggests a level of due diligence and trust. My take on this is that AB Commercial Real Estate Private Debt Fund, LLC, is making a calculated move to scale its operations. They are clearly seeking to capture more of the real estate debt market. The success of this strategy hinges on their ability to identify profitable opportunities and manage the associated risks effectively, especially considering their guarantor role. It's a sign of ambition, and while increased funding is generally a good thing, the ultimate proof will be in how they deploy these funds and what returns they deliver. Alright, that is our quick dive into AB Commercial Real Estate Private Debt Fund's latest filing. What are your thoughts on this funding boost? Does it make you more or less confident in the fund? Let us know in the comments below if you found this explanation helpful. Give us a thumbs up and make sure to subscribe for more decoded corporate news. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and I'll see you in the next one.